Welcome back to Go Gaddis Real Estate Radio. In this segment, we're talking questions buyers and homeowners and home sellers should be asking right now, especially if you're thinking about buying or selling or refinancing or potentially restructuring a loan in the next 12 to 24 months. I want to welcome you again to Go Gaddis Real Estate Radio. I'm Cleve Gaddis, and I'm here to make real estate clear and simple and hopefully worry-free. If you want to connect with us, it is simple. Go to gogaddisradio.com. You can ask questions that we answer on air or off air. You can make comments. You can challenge things we say. You share your ideas with us if you want to. We love that. You can also ask us to do some research on your neighborhood to help you understand whether or not you and other homeowners in the neighborhood have a particular advantage when it comes to selling a home. And you can subscribe to our podcast and our YouTube channel. Without further ado, I want to introduce Matt Scout, who is Vice President, Executive Mortgage Loan Originator for Southeast Mortgage. He's also our preferred mortgage partner. Welcome.
Thank you, Cleve. Appreciate it.
I think a lot of people out there today are wondering what is going to happen with interest rates in 2026. And I am finding people fall solidly into one of two camps. There is one camp who believes interest rates nobody says they're going to go back down to 3, but they say they're going to be way, way lower than they are right now currently. And then there's another solid group that thinks, interest rates are just going to be kind of about where they are for most of 2026. Now, I know you can't quote rates because you can't tell somebody what it's going to cost them to get a loan in June of this year. But what do you think is going to happen from an interest rate perspective?
When you look at it, over the past 50 years, the average rate has been around 8%.
Okay.
So in all things considered, we're actually doing pretty good right now. If we're in the 5s and 6 range, then we're pretty decent. Now, I do think as we go into the next year, we're going to have a new Fed chair. We're going to have a few things changing. Rates are probably going to go down, but I'd be hard-pressed to think that we're going to get back into the threes anytime soon.
Yeah.
It's going to be very hard.
It's interesting, and I'm sure that you're keeping up with this as well. And there was just a footnote after the last Fed meeting. And now, I'm not an economist, but I know that when they are trying to stimulate the economy, they will do what they call quantitative easing, and it's their process for buying treasury bills and treasury bonds instead of letting the market determine the price. And so it seemed to me like they were saying some quantitative easing is starting and they're going to buy, I think they said on the shorter term end of the bonds. Talk to me about that. Do you know anything about that?
Yeah, it sounds like there's going to be a little bit of a change in how the government's actually going to approach, or the Federal Reserve is going to approach them buying bonds. I think that's going to be picking up a little bit, which is going to bring a lot more activity into the actual bond market, which in turn can definitely drop rates. We just don't know how much.
Right. It depends. I mean, I guess if they bought all of the bonds, they could do that. Federal Reserve, I don't know what percentage they were buying, in 2020 and 2021 and 22. But it was a very, very high percentage. They had trillions of dollars they had invested in the market. And what happens is, if you're listening and you're thinking, I don't even know how all this fits, what is it, Matt, that really determines the mortgage interest rate? If you had to give somebody one particular number to look at to say, okay, if I watch this number, then I can tell what's going to happen in the mortgage market, what number would that be?
So there's not an actual number I can just flat out say, but what I typically watch is the 10-year T-bill.
The yield. The yield. Right.
Yes.
Okay.
So that moves in correlation with the mortgage rates.
Yep.
Now, the 10-year percentage, I think that's in the low 4s, like 4.1 right now. That's not the rate. But if you want to see what the movement is doing of the interest rates, that is going to be your best correlation.
It's interesting. And we ran some numbers back many, many years, and we found that the average delta between the 10-year yield on the 10-year treasury bond and the 30-year mortgage was 1.75%. It got to a while where that spread was like 2.75%, but it sounds today like that's closer to 2%. So that delta, that difference is narrowing, which I think is a very, very positive thing. So if I just had to, I give you one of three choices, okay? This is all you can choose, is one of these three choices.
Okay.
Interest rates are going to go up. Interest rates are going to stay the same. Interest rates are going to go down. Which camp are you in?
I'm more in the camp of B. I think the interest rates are going to stay the same. If they come down a little, that's about it. I don't see anything that's going to change the rates enough at the moment to make a huge
Well,
difference.
and so what is enough? What is enough? That is such an interesting point. Is it
Yeah.
a 0.5% that's enough? Is it 1% that's enough? What is enough?
I think we are in that bracket right now of enough. I
Meaning
think that,
there might have already been enough changes in where we were, which was up closer to 7.
yeah, you had conventional rates approaching 8% at one point. So
Oh,
if
that's
we're
true.
talking conventional rates in the low sixes,
Yep.
that difference right there was enough to get people to be able to qualify and be more comfortable in their real estate choices.
Love it. Love it. Love it. Love it. Question for you. Over the last 30 days, what is the lowest interest rate you remember locking somebody for? If you don't mind me asking, I don't even know if that's appropriate, but I'm curious and I want to know.
You said in the past 30
In
days?
past 30 days, yeah, or whatever you can remember.
I would say FHA is always the lowest rate. I locked someone at 5.25 was the lowest I've seen.
5.25 FHA. Now, those
Mhm.
rates are more on the government loans, the lower ones like that. They're more the
Yeah.
government insured loans, so USDA, FHA, VA, things like that. Is that correct?
Mhm. That's correct.
5.25. That's not too bad. Okay, first time you bought a home. Do you remember what the interest rate was?
Nah, I have no idea.
First time I bought a home, my interest rate was 8.875%. It was March of 1992. And the reality is, I felt like I was lucky to get that money in the first place. I felt like if the lender actually knew me better, they wouldn't have loaned me the money in the first place. Now, I know that's probably not true, but like it didn't make any difference to me. And back then, I mean, income, if you, in 1992, if you made $40,000 a year, you were making big money back then, 40 or 50,000. So everything has changed a lot today. And I'm not trying to minimize the fact that I believe, home buyers have been in a little bit of a stressful situation and home sellers have felt stuck because their interest rates are so low. And I'm not discounting any of that, but sometimes you just got to move on with life. It's just the way it is. I want to switch to a different, oh, by the way, if somebody wants to reach you, Matt, to talk to you about whether or not they're qualified, what they need to do to get qualified, how they can get the best rate, whatever strategy call they want to have, how would they reach you?
Yep. So you can either text or call me at my cell phone, 480-636-6762, or send me an email at matthew.scout@southeastmortgage.com.
Perfect. And if you don't remember any of those, go to gogaddisradio.com, say, hey, connect me with your mortgage guy, and we'll hook you right up. Now, are you already offering the Get Ready Guarantee? So if somebody calls you and says, hey, I want to give me that Get Ready Guarantee, my understanding is if they'll spend 20, 30 minutes with you on the phone, max, then within 24 hours, you'll send them a written report of everything they need to do to be in the best shape possible when they're ready to get a mortgage. Is that something that's still a go?
Absolutely, it is.
Awesome. Awesome. We had a situation recently, changing gears, where the home buyer said they were buying the home to live in as their primary residence. In the underwriting process for the mortgage, they realized that no, this person was going to stay in Georgia and continue to work, but since they were working from home, they figured they could count their, or wait a minute. Yes, were both homes in Georgia? I don't even remember the example. It doesn't matter. But they were trying to qualify for a primary residence when it turns out it was not going to be their primary residence. So talk about that, and talk about how a borrower, how a home buyer would understand what to say to the lender. Because it could be that that person really thought that they could count it as their primary residence. Could be they were answering truthfully. It just turned out not to be the way the underwriter looks at it.
Correct. And I think it all is about knowing the information up front, having that conversation with the loan officer up front, and just giving me you can give me as much information as you want. It's never going to be too much.
Yep.
Give me everything that you think is important, things that you don't think they're important, because then I'll be able to dictate how to structure the loan and how to proceed forward so that there is no hiccup when it comes into the underwriting stage of things.
So let's just say that I'm getting a mortgage and that I don't know whether or not I should be counting something as my primary residence because I have a house here in Georgia. and I'm planning to keep it, but I'm only going to keep it for 6 months or 8 months, and then I'm going to move to another home, which will be my primary residence, and let's just say that was in North Dallas, because that's where Tammy Slay lives, and as we get married, I'm very interested in living with her. And so how would I know whether or not I could say that was going to be my primary residence? I don't know how I would know. How would I know?
Yep, that would be a conversation to have with your loan officer. If you're going to be living in that house,
Yep.
primarily from day to day, if your job is around that house, that's what we're going to call as your primary residence. If you cannot travel from the house to your job in a normal amount of time, then we would have to have a conversation about, is this primary or is this something else?
And is there a little bit of an interest rate premium when it's a second home loan versus a primary, or sometimes are those rates the same?
In most cases, there is a premium. Whenever you're looking at a primary residence interest rate compared to second home or investment property, the second home and investment property is going to be higher. Whether that be higher interest rate or higher cost to get the interest rate, there is going to be a premium there.
Got it. Before we take a break, 3 different choices. Is it easier to get a mortgage today? Is it about the same today as it was 3 or 4 years ago, or is it harder to get a mortgage today? What do you say?
I would say we're leaning more towards A. It's getting easier to buy a house now and get a mortgage.
I feel like that as well. And why do you think that is? We've only got about 30 seconds left in this segment, but why do you think that is?
I think a lot has to do with adding AI into the mix. AI is able to sift through a lot of the information and make it a lot more direct and easier to underwrite the files.
Interesting. So you have less emergencies that pop up in the end, less mistakes and things like that.
That's
That is
correct.
such a thing. Hey, will you stick with me for the next segment?
Yes.
Awesome. When we come back, we're going to tackle one of the most misunderstood topics in home ownership, and that's mortgage insurance. A lot of people don't even know what that is. We're going to discuss when you have to keep it, when you can remove it, and how some homeowners are actually getting rid of it faster than they expected. So stay tuned.